Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 5th of April. All right, now just coming through the Asian session here, we've got the US equity futures in the positive. Okay, we did have a bit of a risk-on profile where the Aussie, Kiwi, Sterling and Aussie were going up. Now that's a little bit mixed. There's not really anything going on. Okay, if you look at the majors, the moves here are really fractional. But there's something happening on the bigger stage, right? And what I want to show you is just quickly, I think it's time we really start to pay attention to the US dollar. US numbers are coming out weak across the board. Okay, factory orders, like tier 1 data, tier 2 data, and all the other little components that make up the economic sort of structure of the US are all coming to a grinding halt. So that does a lot of things for us. Now, just looking at the hourly charts, you can see the dollar index just broken down. Dollar Swiss as well. Now we know dollar CAD is moving downside with weaker dollar and also rallying oil. And you can see here also, it's been a little bit of a quiet one. The beast, dollar yen, just also drifting lower. Now, I mentioned at the start of the week, just be careful around trading, trying to get short euro and sterling in particular, right? Because the longer term trends are still up. And once again, that's sort of proven true. But you know what? It's more the US numbers that have supported that move. Okay, now Aussie RBA didn't raise rates yesterday, so that's a bit of a weak sort of negative point at the time, but they did have a hawkish statement. But once again, the weaker dollar is dominating things. We've got the RBNZ with the rate hike shortly. Now what I want to do is lift up the hood, and what I'm talking about is have a look at the daily charts. Now this is where you're going to find a lot of the answers. Now euro cruising topside, as is sterling. You can see the more significant trend lines in green. Okay, Aussie still got a fair bit of work to do, but this tells me it's got a long way to go before it hits that first trend line, 200 points. Whereas euro and sterling are very close to or already breaking higher. Kiwi also in the same basket. Now, this is where you want to come back down to. Now, the dollar index. Okay, it's over here on this side. Okay, just breaking down, but this is a long-term trend line. Okay, going back to 21. So it's just breaking down, and it's doing the same. Had a little tweak on dollar CAD, and you can see here the long-term chart here on dollar Swiss and also dollar yen. We are getting close to a significant move in the dollar, where we see a 300-400 point move reversal. Right, equity should rally, the dollar come off. You're going to see euro, sterling, Aussie, Kiwi cruise to the top side. To me, right now, it looks like the market is just waiting, right, for the catalyst. And what I'm talking about is a fundamental number, right, that comes out and really gives the market a push and confirms the whole negative weak outlook for the US dollar. Now, tell you what, it'd be a great day for the US non-farm payrolls because we'd have a few days to trade. This is coming out on Easter Friday, which is not helpful for anyone. But if these numbers are weak, it really confirms with the rest of the fundamentals, the tier 2, tier 3 data, which is coming out weak, that you know what? The US economy is cooked, and the Fed are going to have their hands full in a couple of months. When everything starts to crumble, they're going to start cutting rates. Now, I don't want to get you excited. We're a long way from that because inflation is still very high. It needs to get back down to 3% before they can start considering cutting rates. But I tell you what, the writing is on the wall, and the instruments, whether it's the currencies or the equities, will start factoring this in. So I know non-farm payrolls are on Friday, but start to have a look through where the next US number, the next US numbers are, because this is the key component. Okay, and let me just come up here and add all the data in here. This is what you want to do. Make sure you've got all the data ticked. I had missed out some of it, and it's not like the calendars are hugely accurate. So you want to get all the data you can. So if I just tick that across the board now, the factory orders were really exceptionally weak, and that's really given the US dollar another kick to the downside. But once again, we are just waiting for the nail in the coffin. Okay, so this is where tier 3, tier 2 data can really come into play. So if I just come down here, looking at the ISM non-manufacturing numbers, the ISM manufacturing numbers were weaker. This is weaker again. It's another building block to that weaker outlook for the US economy, which is already in play. Okay, so then you come back to your charts and you're getting confirmation of this on the daily charts. Okay, the US dollar we're right at the precipice of the move. Now, it doesn't look like anyone's super confident just yet to dive in, but that's what I'm saying. If we get a really big number, maybe the non-farm payroll's Friday, but if we get weak numbers in between now and then, it'll start to move, and you need to start thinking about getting onto these trades. Okay, so flick through your charts, have a good look around, see what's going on. And this is what I'm talking about with the dollar index. Okay, it's breaking down on the hourlies, but this is the bigger trend line on the daily charts. And you can see it's got a long way to go on the monthly and weekly charts before it could easily be down 400 or 500 points. You know, we get weak unemployment numbers followed by weak CPI numbers a week later. It's all over. The dollar's gone, but start planning the trading opportunity now. The beast, right? Dollar yen, which is just been sort of tweaking along. This is where I think we could start to see a big rollout of, residual positions. It's breaking down here, and all we need is for it to break down through these other trend lines, and we'll start to see it run. If you have a look on the crosses, I know Lee had a good idea here, getting short sterling yen. All the other crosses have already sort of broken down. This is where you can start to see a bit of a trend, particularly for the yen. Okay, and it's a good idea. Exactly what Lee was doing there, okay, was focusing on just simple like structures, okay. And if I just show you this this component here, it's a purely technical setup, and this is I would say it's a bit speculative, but it's informed as well. Dollar yen is breaking down, and all the yen crosses. So what you do is you go looking for the one instrument that hasn't broken down, and that could be the one that you get on, right? So not a bad job there, Lee. We'll see how that plays out. So anyway, that's what I'm thinking is, okay, it's really time to switch on. We've been in this sort of dormant phase where we've seen the dollar up and down, up and down, up and down, but we are starting to see a bit of a connection now with the fundamentals. They are all coming out weak. I think we could see a weak dollar across the board, and now's the time to start planning those opportunities. I know it's a bit stretched on stochastics on a lot of these. Okay, it doesn't mean we have to get short now. We can get short on retracements or wait for the big nail in the coffin, and that's a big fundamental release. Okay. Now, barring any major geopolitical events, the writing's on the wall. I think we're going to start to see a significant move here. Euro, sterling, Aussie, Kiwi topside, and all the dollar pairs downside. Okay. All right, guys, that's it from me. Good luck. Happy trading. Cheerio.